What's going on, guys? Grab a pen and jot this down. Today we're going to talk about the risk of deflation, the opposite of inflation, obviously. So I've seen Elon and Kathy Wood talk about this. They mentioned the probability of interest rate hikes will decrease current costs, market costs. I think this is correct, but I don't think it's going to happen in the form maybe as the news is displaying it. I think Elon has very good insights about how inflation will impact production costs, given that Tesla and SpaceX are so big. They have so many parts, global parts, from screws to man laborers across multiple countries. So if he sees a 1% shift, it's equivalent to like $2 million in additional expenses. But will interest rate hikes cause the deflation? I don't think this is going to be the case. The reality is I actually don't think interest rates in the United States are going to increase for a very long period of time, if ever. I mentioned this before. I think there's a very real possibility that we're at a very low interest rate environment for the rest of the cycle of America's current super cycle. Basically, these trend lines, the reason is because we have gone from 16% interest rates in 1974 to now it is zero. And given the fact that we have so much debt on the books, it's really hard to increase these rates. So I think if anybody's really forecasting rates in the 4, 5, 6, 8%, I just don't think it's likely anymore. And you have to really think about what's just a low growth, no churn, no turn environment going to look like for the foreseeable future, 20, 30, 40 years, unless something shifts or changes. The reality is that those rates are directly correlated and related to the level of debt that's on our books. And if we don't figure out a way to reduce the deficit, or don't figure out a way to afford interest payments as they keep rising, it doesn't make sense for the government to say we have to increase rates so we have to pay more and we have to invest less in our own country. So it just doesn't make sense to me. I think all these interest rate inflationary conversations are pretty much useless. Nobody has a good feel for what's happening. There's a lot that's going to change over 50 years. And I wouldn't bet that what the current environment, America is a superpower, China is a superpower, it will look very differently in like 75 years. And the interest rate conversation wouldn't be the top of mind. From my perspective, because crypto has created a new benchmark for financial markets. So we'll see new ways to finance products, how to create capital, how to build capital, and just how digital assets are consumed, financed, invested in, transacted. I think it gives all these countries a different asset class to look into and say, all right, this is where we're going to be, this is our alternative benchmark. So that's the comparison, and I think the interest rate conversation is pretty much useless at this current point.